why the odds are stacked against you in Forex trading. Stay tuned, we're going to talk about that next. G'day traders, I'm Stacey Burke from Stacey Burke Trading, and today we're going to talk about understanding how the odds are stacked against you as a retail Forex trader. So I want you to just understand that a lot of the times that bank traders themselves may be taking trades that have zero risk on them. And what that means, for example, you've got an international company, say Ford for example, and they want to build a plant in Australia, or they want to do a campaign in Australia. They have to change their US dollars for Australian dollars. They'll call up their foreign exchange dealer, might call up the bank, and they'll say, I need to buy 10 million Australian dollars. The bank might say to them, okay, the current price is, the live market rate may be 79. They might tell them that they're going to do it for 79.02. And the bank will capture the spread on that exchange. The client is happy and the bank is happy, and they've just profited on the spread from which they've sold at to the customer. Now the bank has just merely transacted that into the live market. They've captured the spread, they no longer have any exposure, and Ford has the money they need to now set up their campaign in Australia. That's a zero risk exchange for the bank, but they've profited by the clients paying the spread, the difference in the live market. As a retail trader though, the difference that separates us, where the odds are significantly stacked against us just from that perspective alone, is that often the professional trades that are being executed in the live interbank market have zero risk on them. So they're being traded largely for clients in the regular global money order flow that goes in and out of the markets 24 hours a day with everything that's being transacted because of the global economy. But as a retail trader, you have to understand the data that you receive, just looking at some simple things, even the data that you receive has come from the live market, the interbank live market, from that exchange to the broker to you. So most likely you're getting the data, even though you think that it's live and current, there's probably some degree of a delay in receiving that data. Number two, your price fills are the worst. So when the bank takes a position, or when you buy from your broker, you're paying the maximum worst price. You're always going to be paying the worst price, whether you're buying or selling. Your execution will always be at the worst available price. The banks get the best fills. The brokers will probably, in the majority of the cases, just hedge your position. So if you buy something, they may mirror that order to make sure that they can hedge against any potential losses. But the order fill that you're going to get on your screen is always going to be the worst price available. Number three, you're going to pay the largest bid-ask spread. So in the interbank market, they may pay a pip or 2 pips, whatever. We may be paying a couple pips, but we're also paying already the worst price scenario. And again, our data may be slightly delayed. So in all the cases, no matter how great you think your spreads are, they're always going to be, for a retail trader, they will always be the worst case scenario. Number four, you're also trading with the least sophisticated tools and technology. So all this garbage that's peddled out there in these courses and these indicators and expert advisors and all these different things, they're garbage. In the majority of cases, they're garbage. I'm not to say that all of it is, because there is some really excellent instructors out there, but most of the garbage that's available is perpetuated by the industry. They want to continuously lure people into the excitement and the idea of fast money in day trading the markets. They're well aware of how the retail trader thinks and all the challenges that they face. And so you're going in there with the same old recycled garbage with, moving average crossovers, MACDs, RSIs, all these different things that people perpetuate are the holy grails of trading. But in reality, if you're intraday in day trading the market, there's not a whole lot of new ideas that come around. And a lot of that is just rewritten and resold to the public. What can we do? The only thing you can really do is rely on yourself. And I talk about this, my 7-step daily routine, get it from my homepage, start building a daily routine and crafting the disciplines and the skills and the mindset that are going to ensure not only hopefully your success, but your longevity in trading. Trading is a performance activity. It's a performance activity that can pay you very well, but you get paid to perform. And so with that in mind, and it's like playing chess against a grandmaster. The moves that will play out on the board are never going to be the same. Occasionally there'll be things that show up that mirror similarities, but ultimately it will depend on your skill and your expertise and your mindset and your ability to execute day in or week in and week out over the long term. You need to rely and build your own skills. Your time frames, if you're day trading, you need to understand what really moves the markets. And it's driven by the big money, the banks, the hedge funds, the large institutions, and it definitely is built around the market opens and closes. If you don't believe me, go back and go bar by bar on your hourly or your 4-hour charts, even your 5-minute charts. I don't recommend trying to trade off those, but I do suggest that you start looking and understanding the importance of the market opens and closes, who's in control of the markets at those times, and being able to start to identify where there's been positions built up or where there's been a range established now that the market can push from one side to the other. And that's this last component, is risk reward. Understanding risk reward. All these other momentum indicator systems, all these things are great in a trending dominant market where, the old axiom, don't confuse brains for a bull market. Sorry, don't confuse a bull market for brains. And what that means is that during a bull market, when there's rampant speculation, no matter what happens, people can buy something and it will inevitably go up. But that only works for a certain amount of time. I'm talking about the ability to profit from the market on a daily basis or a weekly basis or a monthly basis or a yearly basis consistently over the long term. And ultimately what that will boil down to is your edge, and I believe that your understanding of what risk reward really means with your edge, and then being able to manage your capital appropriately. As I said, get my 7-step daily routine for high performance traders. Start working on that edge. Start by being able to identify these asymmetrical risk reward opportunities. The market forms ranges every single day when the markets open and begin to trade. And over the course of that 24-hour period, we'll build up. There's always one good trade every single day on at least one pair. So hopefully you got some value out of today's video, traders. The odds are stacked against us, but it can be traded successfully, but it will require you to perform at the elite level. Have a great trading week. Stay focused, stay disciplined, and may the markets go with you. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.